Good morning, guys. Today is April 4th, Monday, the 1st of April. So April Fool's Day. Hope everybody is doing well. Uh, I think the market will continue to be sideways, is what I had mentioned 2 weeks ago. It's continuing to do that just as expected. No big changes to the left or to the right. I think the big push is going to come only when we see some kind of confirmation that there will be interest rate cuts from the Fed. And the Fed doesn't seem to want to say that is going to move any quicker than we expect. So I still expect second half of the year is when we should see some interest rate cuts. June coming up might be an opportunity, but I don't really think so, given that a lot of the indicators from the Fed watching tending to say that inflation is still a little bit persistent. One of the companies that I'm following, now this didn't come up on the radar. It is Archer Aviation. I made a typo there with aviation. So Archer Aviation is an eVTOL company, electric vertical takeoff and landing company. Now, to talk a little bit about this company, there are quite a few competitors in the market for the vertical takeoff and landing. Now, the way transportation has been segmented by distances, on very large distances, we still use planes. That is usually 500 miles and above seems to be the range for when we will use a plane. Now, for ranges below that, train or car typically tends to be automobile, typically tends to be, or bus obviously, tends to be the option. So less than 500, most in the US tend to use cars and in other places as well. So it's not just a US centric thing. Given the density of people in very large cities, you will find that the big challenge right now, a lot of people talk about, is still traffic. There is only limited amount of capacity to build more roads, and there is a lot of traffic on the roads. Vertical takeoff and landing essentially is a concept that works on top of what exists already with helicopters. Helicopters are useful, and they are very useful for shorter distances compared to airplanes. They reduce the time it takes, but they're a lot more expensive. And also, the design of a helicopter prevents it from being very cost efficient overall. So, there have been a lot of different variations on the eVTOL, and there are quite a few companies. There are about a dozen companies or more, actually, many of whom don't have the scale in terms of funding to be able to call themselves a commercial grade eVTOL. But there are a lot of hobbyists as well. And there are different designs, as you can see from the screen. There's a ton of different designs for the vertical takeoff landing, from EHang to JOBY, from Lilium to Archer Aviation and Blade. There are quite a few companies that all are trying to build the next generation vertical takeoff and landing. So vertical takeoff and landing means you essentially use very little footprint in terms of the runway. So instead of going forward to get the lift and thrust, you will actually take off vertically and be able to land vertically, which means the amount of loom needed for being able to take off and land is also much less. Now, there are different types of designs also available, from Wiz to Archer to Joby. There are microcopters, quadcopters, and there are a lot of different designs all in between. So if you look at the left, it is more the Archer Aviation, the one over here. This is Archer Aviation's unit. This is more like a Lilium unit, and everything else in between. There are lots of different the design challenges and the changes that they make depend on what the initial focus is for that company. Most of them are trying to get to the same point, which is allow for about 100, maybe a max of 200 kilometers or 200 miles, excuse me, as the crow flies, in terms of a distance to be able to pick up and drop for between 1 to about 4 people in that quadcopter or in that vertical takeoff and landing unit. So that's typically where you'll see a lot of people. Now, in the last 10 years or so, a ton of companies have gotten funded, from Joby Aviation in the US, Vertical Airspace, Archer Aviation as well, Lilium, EHang. There are quite a few. So you'll find quite a few of these companies already available in terms of being able to do some initial tests. Most of them have not, if not any. I don't think a single one of them actually has gotten complete FAA certification to be able to fly people in manufacturing distances. So larger than 100 miles. Most of them are still in the early stages of FAA certification. So today we're going to focus on Archer, but most of what I'm saying will be valid for both Lilium and Joby as well, and EHang, which are three public companies. Besides that, there's Blade. So there are quite a few companies public as well. Now, this is a very early stage investing. I wouldn't be putting a lot of money if I wanted to in these companies with the hope that this is a 4, 5, 6, maybe even 10-year horizon for being able to look at some of these companies from a return standpoint. So I'm still going to say you've got to watch and wait. This is not going to be invest right now in this technology. I personally thought very highly of Lilium as well. They're still going through their challenges. They're still going through some European specific changes and challenges that they have to go through. Now, the eVTOL market comprises of two parts. One is very much like an Uber model, which is they will run their own eVTOLs to be able to drop off and pick up passengers as part of the journey. So, for example, if you want to go from your home in Manhattan to JFK Airport, a car like an Uber ride will come and pick you up from your home, drive you to the closest available heliport, and then Archer Aviation or Joby or Lilium will pick you up from there, take you to JFK. Then you'll get on JFK in the terminal into your airplane, and they will probably take you to London or wherever you want to go. So that market is essentially a ride-sharing market. And besides that, they can also sell these units to the large companies such as a United or a Delta, which have partnered. Joby is partnered with Delta. United has partnered with Archer Aviation. So they will buy these units from them and they'll run their own operations. So both of these together comprise of roughly, if you look at it, about $35 billion by 2032 is the hope that McKinsey and a few others have also mentioned that could be much, much larger than that. And it could open up not only the long-term travel market, but also if you are looking at this as a flying car, that could be another way to look at this market. This is not just a quadcopter, this could be a flying car. So instead of people buying cars, there could be a market for just people being able to buy a Joby and fly from work to home. 45-minute commute be dropped down to about 15 minutes. So that could be also a possibility. But right now, as we know it, the eVTOL market is roughly about 35 billion expected by the 2032 timeframe. So fairly large market. Nobody has gotten a significant move in this market from an early standpoint yet. Now, the range comparison, Volocopter at the very low end has got miles-wise in terms of number of miles, can do about 25, 35 miles, more like a drone. And at the high end, you look at a lot of the companies that exist that can do about 250 miles. That's like the One Flyer and the iFlyer. Lilium can do about 200 miles as well. One of the companies that is competitor, Joby, is claiming to do about 150 miles. Archer is somewhere in the 150 to 150 miles, 100 to 150 miles as well. So there's a long range, and the range determines to a large extent the usefulness of that specific product in terms of its ability to be able to take people not just for shorter distances, but also for longer term distances as well. Okay, now the goal is to try to get much, much larger. An aircraft can do 500 miles and above. The Honda VTOL, as an example, hybrid, both electric vehicle kind of technology and also being able to do a little bit. So the hybrid uses both aircraft fuel and eVTOL or electric versus automobiles, which are using only electric vehicles, can go roughly in the same range, about 200-300 miles. But obviously the eVTOL is going to be much, much faster. So if you look at it from the time standpoint on the right-hand side, how much time will it take for you to cover that distance? 300 miles. The sweet spot seems to be where eVTOL can do a much better job in the 400 kilometers, about 300, 250 miles or so. This seems to be the sweet spot, is what a lot of people are saying. And here, the cost per mile becomes a lot more effective for the automobile. So the other part, the other way to look at it is what is the cost per mile? We'll go through some of the calculations as well. The cost per mile for an automobile running this 100-mile distance, let's say this is the range, a 100-mile distance is going to be $1.50 per mile, whereas for the eVTOL, it's going to be almost twice that, $3.6 per mile. So if you're looking at a 100-mile radius, you're paying $400 or so on a trip for ride sharing, versus on the car basis, you'll be probably paying about $150 or so if you get to the point of even automated autonomous cars. So cost, range, those are the two most important things. Obviously, the time is the other. The question becomes, am I going to get enough of of a distance variation to be able to support the time and the return on investment for that. Now, if you look at the range in terms of nautical miles, which is as the crows flies, as they call it, most of these companies can do between 4 and 5 seats. Some of them are much, much smaller. The helicopters can do 3 seats, but the ones that we are looking at for this specific presentation, Joby is one, Lilium is a competitor, Volocopter is much smaller. Vertical Aerospace is a company, and of course, Archer Aviation. So Archer Aviation and Lilium are probably the two ones that are most likely the furthest ahead in this market in terms of being able to get FAA certification from all the data that I've seen and I've read. So you'll find that those are the two ones that we need to look at, and both of them have about 4+1 seating, more for a pilot plus 4 people who can be seated to be able to move them from one place to the other place. Now, in terms of what is needed to be able to do takeoff, landing, those are the two most extreme. So you need to be able to, so previously, if you look at the helicopter, it actually needs a lot more space to take off and then be able to move up. Whereas eVTOL could do it from a much smaller space, can just do vertical move right up. Then the next part is the transition to the climb, and then the cruise model, and then the descent model, finally to the transition again. So 2 transitions. One transition is to be able to move into the reserve energy model, and then finally land. So if you look at that whole thing, it from hover, climb, cruise, descent, landing actually feels like a 4-stage process of a stock market, doesn't it, of any given stock. So the range, true range that people talk about is from the point where it starts its ascent to the point where it completes its descent. So that's the range that they talk about. Now, this also means that even though the battery could support a lot more than that, the amount of effort needed, energy needed for the takeoff and for the landing is pretty high. On the reserve side, you need to be able to have enough energy to be able to safely land. So even though they say 100 miles, it would possibly go for more, but realistically, you need the amount of energy for takeoff and landing, especially because these two are the most expensive. The takeoff and the climb are the most expensive in terms of energy. There are multiple different designs. A multi-copter uses more of a spider design. A lift and cruise uses side wing design. The tilt rotor uses the top and the side design. And finally, the vector thrust uses front and back design. This is more like Lilium. So ducted vector thrust is Lilium. If you look at the difference, this one is more where Archer Aviation is, and Joby is closer to this, and EHang is more like a multi-copter. Now, I'm giving you very high-level design choices that these guys have made. It doesn't mean that one of them will not use some elements from the other. I'm just giving you a high level of if you had to put these into buckets. Now, the question then most people ask me is, which is the best design? Actually, there's no really best design, so to speak. Each of them are design choices that you make, and there are trade-offs that you need to be able to make. I'm not an expert in terms of being able to understand the design choices associated with this. But from everything that I've read, you can't really have a perfect design. Every one of these designs has a few trade-offs, both for safety, for volume, for distance, volume meaning number of people you can hold in it, for distance and for cost. And each of these companies have made different design choices. Now, the question becomes whether some of them can have inherently a better operational cost efficiency than others. And so far, because the data is still early, it's not easy to determine that one design is better than the other. Now, there are 2 things you need to be able to do, thrust and forward motion, which is how do you move up, thrust and lift. So thrust, move forward, up, lift upward. Now, helicopters typically tend to have baseline propulsors. So that even you'd have vertical propulsion fairly quickly. And multi-copters, which are wingless, tend to provide only vertical lift. So both of them provide vertical lift, usually have the ability to be able to do a wing-based design that moves upward. Whereas eVTOLs, both from a multi-copter standpoint, to vector thrust, independent thrust, combined thrust, you look at all of those models, each of them provides different ways to be able to get you the thrust, the distance, and also the height that you need to be able to take off. That's the big difference between helicopters and multi-copters. So wingless versus winged. Winged meaning you have side movement, as you look at it like this, versus only on the top, you'll have rotors that keep going up. And the differences typically between a lift and wingless machines typically tend to be the fact that they cost a lot more to have wing-based machines. Typically, you'll find, and I've seen that a machine from Archer or Joby can cost you anywhere between $1.5 million to about $3 million, and the Honda eVTOL is in the $3 million range, whereas the multicopter, more from the EHang, is in the $1 million range as opposed to $3 million range. So keep that in mind when things are concerned. Some of the examples: EHang, as I said, is a multicopter. Velocity volocopter from Germany. Joby, even LILM, is similar to the volocopter in some senses. Joby Aviation, and then Vertical Aerospace. Similar in terms of payload, about 450 kgs to about 1,000 pounds, somewhere in that range. And the capacity is about 4+1 passengers on the vector thrust side. Multicopter side is much lower. They can typically do about 250 miles per hour, 250 kilometers per hour, about 115 miles, 120 miles per hour. Keep that in mind as well. So they tend to, 400 miles an hour, tend to go fairly fast as well. Archer Aviation, this is what the design of the Archer Aviation looks like. It is a winged design. Looks very futuristic. I actually like it. It's got a whole bunch of engines and a bunch of rotors. We'll talk about where those exist in a little bit. They are primarily focusing on building a sustainable, low-noise electrical vertical takeoff and landing, all electric, which means that there's no aviation fuel that is needed. And their goal is to be marketed in 2025 with full production in 2028, meaning that they will actually be available in a lot of different places. So they are in the stages, in different later stages of the approval from the FAA. Very similar, maybe a little bit different in terms of their timing, but very similar to Joby Aviation. Both of them are fairly close to getting within the year 2024, 2025. They should be able to get an FAA approval, is what they're shooting for right now. Now, what they're trying to get to is a point where 55% of the people that are living in urban areas could actually use a vertical takeoff and landing solution to be able to do their commute as part of their daily commute, or even use it just for being able to. The expensive transition might be, instead of having to go from Manhattan downtown to JFK in an hour or 45 minutes or more, you could do it in a much shorter time frame. This is an example. LA, supreme density, congestion is very, very high. Because of that, you tend to lose a lot of time on the roads just doing nothing. Instead, can you do it much, much faster? The aircraft itself, about 100-mile range, optimized for about 30 to 50 rapid trips back and forth. Right, so you could go there back and forth about 20 to 30 trips and use the charge time in the middle for being able to do that on a given day. Speeds of up to 150 miles an hour. And then about 1,000 pounds, which I said is about 4+1 pilot plus 4 people at the back to be able to safely go there and drop them off and pick them up. Complete vertical takeoff and landing means they have to be able to retrofit a lot of the helipads that are available in a lot of different locations. So it could be very much possible that there will be a little bit of a change, that a lot of these airplanes and also densely populated areas such as Manhattan may have helicopter copter pads on the top of these buildings that may be slightly adjusted to be able to suit and support. The big advantage over helicopters also is another factor is that they're a lot less noise. And the cost is about a third than a traditional helicopter. Archer itself has taken in a lot of funding. Just like Joby, they're the only two companies to have taken over $1 billion in funding. They went public in 2021 in the New York Stock Exchange, just like Archer did. Both of them went public through a SPAC, different SPACs, obviously. United Airlines and Stellantis are key partners. They invested as part of the IPO, or just before the IPO, if you will. Stellantis, by the way, is the same company that makes automobiles. They're providing more of the expertise to be able to manufacture at scale, whereas United is the customer partner. They will buy or use a lot of Archer Aviation helicopters or eVTOLs to be able to ship their customers back and forth. And then the key highlights, they have a lot of good engineering within the company itself, is their claim. I'm not going to be able to say whether they are completely there or not. I don't know them as well as maybe some of the software names I might do a lot more. But in this particular case, you can see a lot of the people that have come are from companies that have tried to do this multiple different times before. In terms of timeline, Archer Aviation right now is valued roughly in the $1.5 billion range. Joby is twice that at $3 billion, and Joby the claim is a little bit ahead, but not that much ahead. So keep that in mind when you're going through this. Both of them have similar kinds of partnerships. Both of them have similar kinds of customers. Both of them seem to be somewhat in the same stage, but obviously there are obviously differences when you look under the hood. Now, vehicle certification is what they're going through right now, working with the FAA to be able to get certification for their first product, which is a midnight travel, and working with partners to be able to scale up the operation. They expect early operations in 2025, next year, to 2028, where they're building out their machines itself, the manufacturing capability, to about 2,000 vehicles a year. So that's quite a bit. 2,000 vehicles a year, about $2 to $3 million each, is a significant amount of revenue. Right now, they have no revenue in place. And then when they do their manufacturing at scale, they can do even more than that, is their hope, as the number of customers increases. Now, the two unique revenue streams, as I talked about, ride sharing, which is they will work with someone like an Uber, partner with a bunch of different people. That can be about 50% of the revenue. They will partner with Uber and folks like those to be able to bring customers in who finish the ride on the car, then get onto the eVTOL, get transported to the airport, or they could work directly with Uber instead of having to have people drive from San Francisco to San Jose in the Uber. They could just get them through an Archer, maybe twice the amount of money that is required, but still a very meaningful partnership in that case. Or they will do a direct aircraft OEM, which means they can meaningfully manage to build enough units to be able to sell to a United, which can then be able to run the operations themselves. That could be more of a 50% gross margin business, whereas the ride sharing is a 40% gross margin business, which will make up about 20-30% of their business overall, they think, in the long term. Now, we talked about economics in terms of comparing Uber ride shares versus eVTOL ride shares. The distance of a trip, if you take it as an average 25 miles an hour, the speed is much, much more, obviously, 150 miles, much faster to be able to go. The cost is almost more than twice that, $3.30 per mile. So for 25-mile, if you're going for 20, make it 20 miles, just to be able to easy to finish off the discussion on the cost. So 20-mile radius, $1.5 per mile makes it about $30, and let's make it as $3.50 for 20 miles makes it $70. So it's more than 2 times the cost overall to be able to get this done, but might be inexpensive for certain people that want to be able to do it. The trip time drops by a fourth. That's a big advantage, and they can do a lot more trips because obviously you have a lot more time that you're saving. So they could the cost basis and the revenue basis associated with that could be a lot more lucrative when Archer goes into production full time in terms of ride sharing. They have two big partnerships that I mentioned: United Airlines and Stellantis. Stellantis is the manufacturer of Jeep. They're using them more for a partner to be able to scale manufacturing operations, whereas United has already made purchases of up to $1.5 billion for the first 100 aircraft that will be produced by Archer Aviation. So that's a good sign. It's almost as if they sold their initial customer before they actually produce the product. Now, to try and summarize a little bit just as to where we are, it's a large market that I think has been said. Density is increasing in many of these large cities that makes it very useful and valuable to have these kinds of flying cars, if you will, if you want to call it that. They've raised a lot of capital. They've built the initial prototype and design. They're close to be able to getting the FAA certification and approval. They seem to have the right mix of the payload, which is 4+1 people, plus the range, about 100 miles. Obviously, larger the range, the better off they will be, but 100 miles is pretty decent range. But again, this is nautical miles, not necessarily going to be able to do the regular miles that a car can do. And then finally, where they've really excelled is the design and engineering associated with building the actual machines. We'll go into a little bit of that in the next couple of slides or so. And they have a strong team, is their claim, to be able to build this capability out and get to the point of FAA approval. So within the next 2 years, 2025, they should start to see a lot of these units really out in the market. Now, the way they've built their specific unit, they've got 6 battery power systems, and they've got 12, if you look at it, they've got 12 engines in each of those rotary machines. So that's a each of these each of these batteries supports 2 motors. So 6 batteries, each of these will support here. This is 1, 2, all the way to about 12 different motors for their combined lift and thrust. And they can do a lot of innovation that they've done is very similar to Tesla in the battery technology, and we'll talk a little bit about that. Very similar to most large airlines, they have to have fault tolerant systems. If something breaks, they have to have something else to be able to take over, which means it obviously increases the cost in some senses, but also makes it a lot more safer. Now, the battery cell itself, building block of the battery system, very similar to what you'll find in a Tesla or any other EV. Cylindrical cell that then goes into multiple cell units that then goes into a pack. They've looked at different form factor options. Sorry, one of them is prismatic cell, which most look like a box as opposed to cylinder, and then pouch cells themselves. Now, what they have found out in their specific way is that for them, the cylindrical cell seems to work the best. Now, they've taken this smallest cylindrical cell option, original lithium battery. They've used it for, Only Cell has used it for a lot of different places. They've done a lot of testing already, 10,000 different trips before they need to be able to mac it down. So they've done that into a battery pack. And that is the way to be able to reduce the heat, which is the thermal runaway strategy, be able to manage the battery system as well. So that's the technology advantage that they've bought in terms of most of these car companies, as well as EV car companies, as well as vertical takeoff and landing companies, you will find will have to innovate around the area of managing battery capability for more distance, more thrust, more power, at the same time getting them to charge very quickly. Those seem to be the biggest challenges right now. 10-minute charge, 20-minute back-to-back trips, that's not bad at all. Key battery takeaways, just to be able to summarize: very fault resistant design, making sure that they can have high performance at a reasonably good turnaround time and manage costs from a longevity standpoint. The electric motor itself, so you take the energy from the battery, you go through an inverter, and then the stator, the motor rotor itself, can spin both the flying wheels on the top, as you see, and also the rotors themselves. So they've gone through a lot of design challenges. I'm not going to go through every one of those. I've seen a lot of videos about the kinds of design challenges that you have to be able to go through to be able to build these systems. At a high level, for me, the most important thing seems to be that they're making the right kind of changes and challenges. And this is going to take a little bit of time. This is not something that we can immediately say will work very well, will not work very well. There are lots of pros and cons. Now, over the long term, they will find design challenges that they've made to be able to be some things that they can change again. But if you look at airplane technology and you look at airplane design, that hasn't changed that dramatically, except for minor changes for such as the flip wings on the left for Boeing and Airbus. So to me, yes, you could make some design challenges and changes, but that's not going to change in a dramatic fashion. Even the last 50 years of aircraft design changes haven't been that dramatic in making the differences. I don't see that being a big difference here in the eVTOL space itself. They've also got a lot of motor assembly consistencies that they've done between the tiller and the lifter motors. One is for thrust, one is for lift. Both of them they've kept as consistent as possible to reduce the overall cost and making sure that they can use that as much as possible in an efficient way. And then besides that, they've used very similar to what you'll find in a lot of different cases. They found that the engines that they've built in terms of what Cessna did many, many years ago, as opposed to what was done by Cessna and some of the aircraft carriers. This one has the design changes that they've made in terms of the engine itself has given the same kind of output in terms of kilowatts. The cost has been dramatically reduced, but that's what you will see even in EVs. If you take an EV ICE internal combustion engine capability, and you look at what has been the changes for ICEs, internal combustion engines, versus electric vehicles, the number of moving parts is dramatically reduced. So that is consistent. That's what you're going to find even in eVTOLs. Consistency has been the same thing in both of these places. Both of them are using similar kinds of machines and similar kinds of technologies to be able to reduce the overall costs. All right, the gearbox itself, lightweight, completely automatic. So in terms of what is needed, unlike some of these other cases, you'll find that you will actually have to get certification even for the pilot, and they'll go through the certification process, if you will, in a little bit. But for someone like an eVTOL, you still need a certified pilot to fly it, as opposed to individual who is a person that is buying the car or can drive it themselves. So manufacturing capabilities in terms of gearbox is consistent as well. Very lightweight, engine has been consistent. Movement across, whether it is from automotive engines all the way across to Archer engines. They've done a lot of, this is The reason I'm not going to go into a lot of detail for this is because what has happened in EV is the same thing that they've leveraged even for aviation. So I really think of these as flying cars in some senses, and I wouldn't be surprised if Tesla comes out with something similar in about 4 to 5 years if they spend enough time, or Tesla just goes buys one of these guys and starts to build out from there. Tesla usually doesn't do that, so my suspicion is they probably start to look at build something there. Okay, in terms of certification, to be able to get certified, you need to do 4 different kinds of things: the design of the aircraft, the operations of the aircraft, the manufacturing capabilities, and finally the pilots. Each of these requires to get certification, and the process essentially requires you go through phases. Many different compliance, many different documentation. FAA sits with you on the plane for many, many times to be able to certify, and then finally you get the certification, and you get a certificate for being able to say, yes, you can actually go ahead and fly. Where they are right now is in the test and analysis phase, where Archer Aviation is right now is in this phase, but they go through multiple circuits. What do they expect? Somewhere in the second half of 2024, they're expecting to receive certification. That's where they are right now in this particular stage. So somewhere in the later part of this year to early part of next year, they've given every one of their quarterly updates, has said they're still on track. My suspicion is probably going to get to early 2025 by the time they get their certification and then move forward from there. That's Archer Aviation. Now you can find a lot of videos about Archer Aviation on YouTube just to be able to show you what are the different things that the plane actually does, how it moves, etc. So I'm not going to go through those to show you that in a large extent. What I'm going to go through now is our more smaller version of our 5-step process, given that there is not going to be a lot to see in terms of the actual fundamentals for this company because they're losing money. They're actually not even making money. There's no revenue in this company right now. So let's go to Archer Aviation. ACHR is the ticker symbol. Before we go to the monthly, let me just show you. They have raised enough money. As I said, they raised $1 billion, and they're also losing money consistently. So they have no revenues to speak of. This is the annualized revenue basis, no revenues to speak of. And they've gone from 25 million to about $500 million in losses. So every year they seem to be going a little bit higher. This was fairly high. So they did a little better job in 2022. But almost $500 million in losses on an annualized basis. On a quarterly basis, that loss looks like about $100 million right now. Yeah, but they lost quite a bit. Now they seem to be coming a little bit better. Maybe. Not really sure if that would necessarily be the case. Most of this is associated with the initial prototypes. They've still not done manufacturing at scale. This is just initial prototypes. So they're losing about $500 million. You look at the balance sheet. The question is they have $475 million. They're probably going to raise money again. They have about $19, not a lot of debt, but they're definitely going to raise money again, is my sense. They've raised $1 billion so far. They've got about $500 million of that left, about $480 million. They're losing about $450 million a year. So they're probably running out of money by the end of the year if they continue at the current pace. So that's probably one of the big reasons why the valuation has been tilted lower. That people are expecting them to raise money again for them to get to the next level. No cash flow to speak of. So really, I don't necessarily think this was going to be a lot of fundamental review. They've got some money in the bank to go to the end of the year, but that's a big risk that a lot of these companies have, which is, will they run out of money before they go bankrupt, is a question that people have about these guys. And my suspicion is that they're going to have to raise money again. Definitely, not just suspicion. Okay, let's look at the monthly chart now. Stage 1, then decline, solid decline. This is a stage 1 build up. This is a stage 2 markup, stage 3 consolidation. And technically on the longer term basis, this is just a decline. This is a higher high and a higher low. In fact, even from here, you could call it a, so, but right now in the long-term stage, a monthly chart, this is declining, going down. Stage 4 decline, continuing that on the, yeah, this looks like a decline for sure. Looks like a head and shoulders had formed, and now that moved into the decline on the weekly chart as well. Let's draw some support and resistance lines just to get a little bit of a better sense. 399 seems to be one spot. They're right now at 456. That's the support. The resistance seems to be definitely in the short term in the 518 to even, you could be in the 577 range, but realistically, they even have to go through this support area or this resistance area. In the medium term, they are also on the declining, going lower, stage 4 decline stage. And even in the short term, they are in the decline stage. They should get to about in the $4 range fairly soon. There's no catalyst. And none of these stocks have a catalyst unless someone is accumulating shares. The RSI is pointing downwards. The MACD is pointing downwards. This is more likely going to get to the $3.99, $4 stage, as opposed to the $4.50 that it is right now. Just to give you context, this is about 1.4 billion. And look at JOBY Aviation, one of their competitors. They're also in a similar kind of a model, but JOBY came out with a larger valuation up front. Silicon Valley company founded by a couple of people that were then backed by Reid Hoffman from LinkedIn. They were in a 4 stage and now they're in a stage 1 consolidation. So this is stage 2 markup, stage 3 consolidation, stage 4 markdown. Now they're back in the consolidation stage 1 phase. We could even call it a decline phase in some senses, but they're really consolidating. My suspicion is they probably also go down. They're nearly more than twice the valuation in terms of market cap. But it'll take a while. If you're looking to invest in these companies, my suspicion is you'll have to be very, very patient. It wouldn't be at least another 3 to 4 years before you actually see something meaningful. That's Archer Aviation. Let me know what you think. There are quite a few other companies as well. As I had mentioned, Lilium. Let's look at Lilium just to be able to give you a little bit of a better sense. So Archer Aviation 1.4 billion, JOBY Aviation 3.6 billion, Lilium is about 400 million, almost $500 million. So of the three, this is the least valued. They are still in stage 1 consolidation. I wouldn't even go anywhere near thinking that these guys are going to go anywhere for the next couple of months at least, or if not even longer than that. Much earlier stage company than some of these other guys are. Very, very range bound. And yeah, Lilium won't touch it. JOBY and Archer Aviation are most likely the two people you want to look at for the short term. And I say short term, that's still 3 to 5 year time frame. Let me know what you think. Thank you very much. Leave me